Welcome everybody. This is the Thursday evening Viper Trading webinar. You are here to learn about trading the futures markets using the Viper tools. You are absolutely in the right place. First, we've got to get our standard disclaimer out of the way, so let's knock that out. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk, and there is a risk of loss. Nothing contained in this webinar, other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here tonight does know that you do trade at your own sole discretion. Okay, good. All right. So, as I said just a minute or two ago, tonight's topic is when to take and pass on trades. But we are going to try to filter in some other topics that I think are very timely. So without further ado, let's get over to screen one. All right, before I get started, including all the new folks here tonight, let's go ahead and take a minute and see if you could just put in the instruments, futures instruments you like to trade. I'll make sure I try to cover as many as I can, or all of them, tonight. Okay, we got Ajit, Russell and Crude, Nazi, a couple more crudes from Craig and Michael, Nazi Crude ES. What do we like to trade? Try to cover those charts today. David D says, I'm still trying to get one or two instruments that I can make some good trade with. Bubba says pork bellies. All right. So I'm going to start with that topic, actually. That's going to be the first thing I want to cover, is especially for anybody who's new, coming in here visiting us for the first time. One of the most important things you can do in your futures trading career to help move it into the successful category, there's lots of instruments you could be trading. You have the currency futures, you got overseas markets, you got the CAC 40, crude oil, of course. A lot of people trade crude. We'll look at that chart in a little bit. Dollar index, I have that up on another screen. EMD, of course, most of you know the E-mini S&P. Now, all these have different tick values. Okay, some of them are $5 a tick. Most of them, a lot of them are $10 a tick. That means ES, of course, is $12.50 a tick. And, it varies per instrument. And YM, for instance, and NASDAQ are $5 a tick. So from a relative per tick risk perspective, when you have an instrument that's $10 a tick, so each tick of movement is $10. Okay, that's a good way to think of it. And versus an instrument that's $5 a tick, for the same amount of movement, on one hand you have the sort of risk-return view on it, where you stand to make twice as much money if you're in the correct with a good trade in the right direction. So on a 30-tick move on TF, the Russell, you can make 150, or 30-tick move would be $300, right? That same 30-tick equivalent move on a $5 instrument like Mini Dow YM would be $150. But the converse is already true in the fact that when you put trades on and you start off with, let's use a round number, 15-tick stop, if you get stopped out on TF, the Mini Russell, we call it the Roosty, you lose $150, whereas on that $5 instrument, you'd lose $75. So it comes down, a lot of it, to two things in instrument selection that are absolutely critical. First of all, it's relative to your account size. So if you have a modest to larger account, say over 10, 20, 50, 100K plus, so a little larger account, you can go ahead and look at these larger $10 tick instrument like crude oil, some of the high flyers. But the second thing to factor in there is not necessarily the fact that you have more money, you can take on more risk. That's not what I'm saying. The second piece is equally as important, is you have to learn how to master the volatility of those particular instruments. So just because you have a larger account and you want to go for the higher tick values, you can lose money very quickly as well. Last word I'm going to say about the $5 instruments like your NASI and your YM and the dollar index is that if you can become proficient at those, and the way you make money if you have, even smaller accounts like a couple of five under $10,000, is that you can start off with one contract, and then once you develop the skill sets to where your win rate is over 65%, preferably 70, 75, 80 plus percent if you can achieve that, that you're going to eventually leverage up, meaning that you're going to put 2 contracts on, and then 3, and eventually more, and you'll work up to whatever you can tolerate, 5, 10, 15, 20 contracts. So don't be deterred by the fact that you're looking at a $5 instrument and kind of write it off and say, well, that's not for me because nobody's going to make any money at that. The fact of the matter is, if you become very proficient at trading any of these instruments, the key to long-term good profits is to get that win rate up and then leverage up the quantity of contracts you put on. Okay? So especially for the new people, I encourage you to take different instruments on this list, put the charts up like we have here, try to trade them. Each one has its own kind of personality. Some of them you're going to like. Some of you might like gold. Okay, some of you might not like gold. There's different. Each one is different in the way it moves, and you have to get in sync with your instrument. Okay. Now, a word about different types of trade setups. I'm going to take a 20,000 foot sort of macro view of markets, talk about some different trading opportunities, and then we're going to look at some other setups. And then we'll pull it all together towards the middle and the end of it, and we'll have everybody in here doing trade calls and whether you take or pass, various things of that nature. Now, we all know that markets go between periods of consolidation, which is essentially range-bound trading, and the ranges can be different in size and shape. Just so everybody is oriented here on what you're looking at, this is all the indicators for Viper trading. We have, not all of them, but these are similar to the charts you're going to see in the room. David asking, how do I get the charts to look like these? You're going to want to ping Gary on Skype. I think he has a template, a room template. They'll make the charts look just like this. So we have a number of things going on here. We have a colored background, green and transitional and red. We have the bar colors, of course, red, yellow, and blue. We have these swing dashes, swing high-low, and the trailing stop dots. Of course, the very prominent thing on the chart is the bands. You have this large, chunky mid-band, and we have 1, 2, 3, 4 bands above it, and 1, 2, 3 bands below it. The ellipses are the swing indicator. That's the swing indicator, and you can set the volatility on that, how intense, if you want to see more swings or less swings. There's other ones, of course. We have the Viper Lightning, which Gary uses a lot. I don't have that on here, but you can use that. Carl was saying the template is on the website. It used to be there, Carl, but I think he took that down. But he might put it back up because we got a lot of people taking a free trial. So that might be the place to find the template if you're on a free trial. So markets go between periods where they are range bound and consolidating, so they're kind of going sideways. And there's a number of clues that you have in real time to tell you what direction the market's going. So for instance, you see this mid-band here? See how it's flat and just going sideways? And that the market comes down and hits this level and comes back up to here and back down to here and then up to here and down to here. Now, a word about the terminology that you're going to hear in the live room. When you hear the term mid-band is referring to this line right here. So you can see that it more or less kind of follows the price around. Price goes down, it drops. Price is flat, it goes sideways. Price goes up, it stair steps up. Okay, that's called the midband. If you hear something referred to as the phantom, the phantom is just a term we use for the outermost bands. So that would be phantom, and this would be phantom. The outermost bands are called the phantom. So phantom trades are trades, when you hear the term phantom trade, just quick explanation of what that is. That is where the market goes down into or close to the outermost band, the phantom band, if you will, and that you take a reversal out of it. Okay, so here would be an example of one here, and normally your target would be, your first target would be the mid band here on a phantom trade. So this would be a good example of a phantom trade. Now, when looking at phantom trades, in my opinion, the best time to take those is when a market is range bound and it's bouncing between the two bands, and the top and the bottom of the range is fairly well defined, right? The second thing you have to consider when you're considering phantom trades at these outermost bands is what the prevailing direction of the market is. Even though it's consolidating in sideways, there's usually some kind of prevailing trend. So let's go back and look at this. You could say that this market that you're seeing right here between about 12 o'clock and into the close today on NASDAQ, after this point here, began to go into what? What was it doing here like this? All the way over here. What was it doing? Was it trending up? Was it trending down? I know it was choppy, but what was it doing? Take a look at the background. What's the prevailing color of the bars? It's range down, but stair stepping down. The background is red. Prevailing color on the bars is red for the most part. And you can see that as it does so, the mid band right here stair steps down with it. So if you were going to take trades in, let's say that you were going to work on learning, if you're not already good at it, trading these ranges, let me ask you this. Would your primary entrance on this market right here be entering shorts, or would you be looking for long trades on this chart right here? So you have your primary entry is either long or short. You're either buying a market, generally around support, or you're shorting a market around resistance. So are you shorting this market or are you buying it? In the last hour of trading here. There's a lot of clues here for you to help you determine what direction to trade. Yeah, you're taking shorts. You're primarily taking shorts. Okay? You're primarily taking short trades. The background is red. You're stair stepping down. You're putting in lower highs and lower lows. And so you're shorting resistance. So each time it came up into a resistance area, you would be shorting the rollover of it. You're going with the trend. So when you think about making trading decisions, aside from your instrument selection, right, we have to decide what direction we're going to take trades. Now I'll show you examples of markets that you might not want to trade. This would be the passing part of trading where you pass on it. We'll look at those in a few minutes. But for now, the primary thing you have to do when you're thinking about taking trades is say, this market is heading down. I'm looking for short entries. Here's a good one here. That came right out of the phantom, gave you a nice short trade down into here, like that. This trade here didn't quite get into the phantom, fell a little bit short, but we have tools that could have got you in on that anyway. You had a nice, beautiful short here. Now, a couple of you had said that you would be trading both sides. Traders who trade both sides, there are pluses and minuses to that, and I would suggest that you experiment with both. You can see that in some of these cases, the phantom trade to the long side, in other words, when it came down into the phantom and bounced, some of those long trades worked out. This one was pretty good right here. That was a nice little run up, right? And then you flip and you short it. So one of the things as you're developing your skills over time is to realize what you're good at and what you're not good at, and then you can try to improve what you're not good at, or you can focus on enhancing and becoming expert at what you're really good at. So what do I mean by that? So if you're primarily a trend directional type trader and you notice that that the market is heading down, well, then you're only going to take shorts. Okay, it's that simple. Now, if you work on the skill sets to be able to trade ranges where you see entries off of phantoms at support levels, by definition, this long trade would be a counter trend trade. If you want me to be just clear about what I'm saying here. In other words, in a down market, you're taking shorts and covering. You're not buying and getting long. That's by definition counter trade and counter trend. And there's absolutely nothing wrong with that. You just have to realize that when you're taking the long bounces, that you're taking counter trend trades and that there is some risk associated with that. Let's talk about the risk associated with those type of trades. Here, for instance, you came down into the phantom, you long counter trend traders, and you might have gotten a little scalp out of it depending on your fill and how close your target was right here. However, when it re-entered the phantom area on this next move down, depending on where your stop was, you might have got stopped out with a loss on this one, on that move down right there, right? This is a phantom that didn't work out. Likewise, over here, you can see that you had a similar condition where, you had here, this one worked out. Came back up, hit the midband, broke a little bit, rolled over, and gave you the short. This one, these two, not so much. Depending on your fill and your targets, you might have got something out of that and then probably stopped out of that one. So when you look at what I just showed you on this chart, what is the win ratio of taking shorts in this movement here? What is the win ratio of shorting all of these rollovers every time it came up and it rolled over? What is the win ratio for those trades? How did they do? %. 50-50 on the shorts? No. Every short when you shorted a rollover here made money. Every one of them. Every single one of them made money. Every short trade in the down move made money. How did it do on the long side? Yeah, 100% of the shorts. The shorts made money because you're swimming in the direction of the river, the stream. You're going with the flow. The trend is down, so you're taking shorts. Every short you shorted, rolled over, and gave you a winner. How about on the long side? How did that do? Maybe 50-50, depending on your entries and how well you managed the scalps up. You had a couple of winners and you had a loser. A winner and a loser. A winner, sort of, and maybe, I don't know. And then a loser over here, right here. So when you talk about win ratios and trying to achieve a high success rate, win ratio, you can see that when you quickly identify the prevailing trend, which in this case was down, taking trades with that in the trend direction, your win rate, success rate is going to be much higher. It just is. It's going to be much higher. Okay? Okay, I want to come back here. I see your question, Bubba. Let me move on. I've spent a lot of time on this chart. I want to come look at a couple other different setups here so we can get a good perspective, from this high level here. Let's contrast the area that you just looked at with this area right here. What's the difference between, and I want everybody in here tonight, one of the important things I really want you to take away from this webinar tonight, if there's anything you remember, it would be this: that you try to develop the skill sets to quickly look at a chart and tell whether it's trending or not. Let's look at some areas to train our eyes to look. How about this area right here? Is this trending? Is this trending in this area right here on the chart, yes or no? Is it trending, yes or no? It's a simple question. Just a Y or an N. You don't give it a lot of thought. We want to get you to a point where you don't even think about it. You just look at it, and within nanoseconds, you know. No, this is not trending. I'm going to show you several examples of where markets are not trending. And so we just have to very, very quickly be able to discern that when we look at a chart. How about this area over here? How about right over in here? How about right here? Is that trending? Yes or no? No. Another example of not a trending market. So the characteristics that are going to help you see this very quickly are as follows. The swing levels on the market are going to be very close to each other, like this. And it's going to take on a very clear sideways type look to it. The midband will generally be flat, and if it's moving up or down, it's doing it just a little bit, right, on the midband. Most of your bars might have a yellow color, which represents indecision. Now, I'm not saying some of these areas you can't trade. That's a separate issue. I'm just saying right now at this point, can you just quickly look at a chart and tell areas of where it's trending and not trending? So when we contrast this area right here and this area right here with this area right here, like this, is that area trending? Is that area trending? Yes or no? Yes. That's a downtrend, right? How do we know it's a downtrend? Well, there's several clues that we have to tell us that it was downtrending. First thing is, we can see that right in here we took out the support level just a little bit, and then we came back up and we checked the midband and we rolled over here, right here, and then we went ahead and took out that subsequent lower support level. So by the time you got to here, in real time, by the time you got to here, you had taken out this support level, and we're heading lower with a series of lower highs and lower lows. The background is red, the bars are red, the midband is stair-stepping down. So what we do in situations like this is we look for retracements. This is the beginning of a trend. So when a market comes down and it breaks, it comes up and rolls. So we have to be able to very quickly come in and watch and observe a market as to what its condition is to determine whether we're going to take trades at all. That would be the passing part of it. Whether we're going to get long and buy support on retracements, whether we're going to trade the range, or whether we're in a downtrend and we're looking to take shorts. Let me flash another couple areas up to you, and let's see if you can quickly discern what you're looking at. I'm going to do a series of these fairly quickly, and I'm not going to give you a lot of time to think about it. Okay, you ready? I'm going to give you quite a few here, and they're going to come really quick. Like I'm going to give you about 10 seconds to say yes or no. Okay? This is an important skill we need to work on and really hone and get really very good at it. So that when you're looking at a chart in real time, you're not wondering what's going on. You know what's going on, and you know what you're going to do about it. We'll talk about trade entries after we do this. Ready? All right, here's the first one. This is the dollar index. Okay, we're looking at the middle of the chart right here. Is this trending or not trending? Okay, let me be clear about something, by the way. As you're answering that, and I see a lot of answers coming in, so I want to be, well, actually, I'll tell you what. We'll do the answer to this one, and then I'll put sort of a little caveat on it so that we're all on the same page when we think about how this is working, okay? Okay, good. Most of you said no, it's not trending. So let me open this chart up and frame this in the context in which it should be properly put to look at it. Now, I just kind of took this little area out of context simply to show you that there are times in moves where it goes sideways for a while, okay? But that doesn't mean you can't trade it, and that doesn't mean there might be some good trades setting up in here that you might want to take. So let's put it in context of the overall move. Here's the bigger picture. Now take that same question, trending or not trending, and what would you say on the chart now that you see the whole picture? Trending or not trending? So this is the whole shot of looking at the whole morning instead of that little sort of micro picture there. Yeah, it's downtrending, big time. Yeah, big time. Nice, beautiful sell-offs. The retracement up, down, little retracements here, down she goes. And a beautiful, perfect sell-off. So technically speaking, from an overall charting standpoint, yes, the trend is down. However, we can see that there are sort of two components. There's many components, but the two main ones are you have this notion of thrusting moves. So what's actually happening in the market is this. Any market, it doesn't matter whether it's stocks, it doesn't matter. This is a universal principle that we're talking about here. When a market is heading down, cell programs, computer programs, known as cell programs, are in control, okay? And that's the big boys. That's your Goldman Sachs, your Barclays, everybody running the algorithms, the scripts, the cell programs, the bears are in control. The cell programs are pushing it down. In addition to that, of course, we have discretionary traders and other traders around the world in the futures markets who are observing, just like you, that the market's going down, and they're shorting and selling it too. Because you want to ride this wave down and make money, yes? Now, when a market gets to a certain level, unfortunately, we don't have crystal balls, so we don't know many times what those levels are. We have tools that help us with it. You can put pivots on here, you can put fib numbers on here, all manner of different things you can do to get these levels. But the bottom line is that when it comes to certain levels here, like here and down here, the market starts to consolidate. So technically speaking, from an overall standpoint, the argument could be made, yes, you are still heading down, and so you're looking for shorts. However, inside of this area right here, you are consolidating and the market is pausing from its downward move. Okay, does everybody understand the distinction between that? Well, in a big move down like this, David, I don't know if there's a lot of buying. The only buying that tends to occur is would be what's called short covering, which would be these moves right here. So think of it this way. All the software programs and all the people and all the traders, all the people who were trading the dollar index who were short from here and perhaps even higher levels, as the market comes down, there is some amount of profit taking. The profit taking causes short covering, which causes an upward draft in the downward move. So that's a good way to think about when you're short and you're trading this and it's a downtrend. Retracements are profit taking. They're short covering. All the shorties who were up and now they're way over here and higher are now going to take some profits. So that's the natural tendency is to buoy the market up, and that's why you get these retracements. In this one right here, you can see that each time the market came up to meet resistance, it met with more selling. Yes? Until over here, it just blasted right through that support and tried to head down deeper. Everybody following that? Any questions on what you're seeing here? So within the context of an overall trend move, you can have periods of consolidation. This one is a nice, clean, well-defined one in the fact that every time it came up to just above the mid-band and it rolled over, you could have been shorting this little area right here. And since you knew there was support down here, each one of these trades would be a little scalper. Scalpy short there, scalpy short there, scalpy short there. Now, this is an important distinction I'd like to make. Even though this market is trending down, and we see that we're getting very clear consolidation here, and most of you, I think, realize that you could have been shorting these rollovers at resistance, technically you're in a range. So this is a separate skill set that you, if you're not proficient at it, would need to work on, which is how to trade ranges. And here again, you want to trade them in the prevailing direction of the trend, which in this case was down, looking for shorts. Okay, that was good. I'm going to give you another sort of easy one, and then we're going to do some tough ones, okay? Okay, I'm going to bring, what do we look at here so far? We looked at NASDAQ, we looked at the dollar. Let me get YM over here. Don't worry, we'll get through lots of different instruments. We'll try to cover as many as we can. Ready? All right, here's a YM chart. YM is the mini Dow, $5 a tick. Yeah, we will, Carl. Well, I'm working my way up to that. I'm working my way up to your question right there. Okay, a few minutes and I'll get to that. I know that's an important issue that we're going to talk about tonight, which is trend changes. In fact, we might get to talk about it right here. So on the right-hand side of the chart over here, I'm not going to even ask the question. This should be obvious. The trend was up. Okay, that's a layup. That's a gimme. That's a no-brainer, right? Everybody, the background was green, stairs stepping up, bars were blue. Now, when you have a powerful up move as you had here, let me ask a question. This is sort of an open-ended question, so feel free to toss out your thoughts. How do you get into a move like that once it's underway? How do you get in? There's no deep retracements to get in. What do you do? It's not pulling back deeply enough into the midband to give us a retracement trade in the midband. How do you do it? How do you do it? Right, retracement down to a trend line. Good. Retracements. Buy support. Good. Right. So this is a subject for another webinar, and we have webinars we'll put on the web that talk about this, the different levels of retracement. You can have shallow retracement, you can have sort of medium amount of retracement, and you can have very deep retracements. I'm not going to get into all that tonight. But the bottom line here is that you can see that each one of these thrust moves, a thrust move is where a market makes a push or a thrust in the trend direction, and then you get a very, very shallow, not very deep retracement. So what's happening here is that the buyers, the buy programs are in control, and they're pushing the market higher, and each of these little sort of baby micro retracements are a modest amount of profit taking, right? A modest amount of profit taking. It pulls back just a handful of ticks, and then up it goes to fresh highs. Continues until things change. Now, I haven't talked about this yet before, but most of you know how this works. On the left, we can see that we were kind of heading down, and this was I didn't go all the way back here, but I would presume that this was some kind of downtrend over here. Okay, and we can see very clearly the background turned green, and we're heading up. So we're in an uptrend here. So I'm going to ask this question. I'll give you a few more seconds on this one. Can you give me a time and or a level where you believe that the trend changed from down to up? So in other words, the time is down here. You can type in a time. This is all Pacific time, so 7 o'clock is over here. Here's 7:18, 7:21. So you can put in a time or a level. Here's the levels over here. 220, 230, 240, or both. I'll give you 15 seconds. You should be able to quickly see this. I mean, just it should snap into your mind exactly. At what time or level did the trend change on this chart from down to up? I'll give you 12 more seconds. Just quickly take a look at it. What time or level did the trend change from down to up? By the way, in this particular situation here, there is no exact perfect answer. Many times when you look at charts, there's normally sometimes a couple of good different answers. So don't worry about being perfect or precise or anything. Just try to, I think the whole idea of this exercise is that you just get a feel, a general understanding of why, how, and where markets change trends. All right, we got some 730s coming in here. Got a 732. We got above it is a 731. Dawn's got a 32 and a 35. Excuse me. Russell with a 16230. All right, so most of your answers are clustered time-wise in this area right here. Some of them are over here. Oops, I didn't want that. There. All right, time-wise, I'll just put a little bar down here. Most of your answers are coming in somewhere right in here, which is good. Perfect. Excellent. How many points do we need to make a trend? 1, 2, 3, or more. How many points make a trend? 1, 2, 3, or more. 4 or more. Just type in a number. Okay, don't know. 4 or more. A couple of 2s, a lot of 3s. Okay, don't feel bad. I know for some of you this is still pretty new, so don't worry about it. 3. The answer is 3. You need at least 3 points, preferably more. 2, it's tough. 1, obviously, 1's not going to cut it. You need at least 3. So let's look at the various points that we have here. And this will help you visualize this very quickly and easily. You can see that when we had this, the prevailing trend was down, and we were taking shorts all the way down. Every time it came into resistance, we're taking shorts. Shorty, short, 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 short. The last rollover you got was right here. That was more or less kind of your final short trade on this nice little downtrend. And then we come up and we take the swing out. This is clue number 1, that a trend change might be afoot. Now, notice we come back into where? The phantom area. We come into the outermost band. Just because we've come through the swing and come up to here does not necessarily constitute a trend change in and of itself, right? No, 3 swings, Don. 3 different swing areas. We're going to look at that right now, okay? So right here we pull back. This former area of resistance is now becoming support, more or less in here, right? And then we take out that area right there with this swing. So here we have 1, 2, 3, right? Bars are now turning blue, and we're above the midband. By the way, that's another thing, and this isn't always true, okay? I'm going to give you just a handful of different tips and tricks and things that'll help you. And then each one of you, everybody has to embrace what I'm showing and use it in your own way. generally speaking, if you're above the midband and you're stair-stepping up or consolidating, going sideways, and the bars are blue, and particularly if the background is green, that's generally said to be an uptrend and you're looking to buy. When you are below the midband or around it and you're stair-stepping down, you're looking for shorts from resistance. Okay, so the midband can be kind of like your guide, long or short, right? Now there's a little more complicated than that, but generally speaking, you can see here that when you were below the midband and dropping, you were pretty much taking shorts on the downtrend, right? When you came up and you started to get blue bars and you're putting in higher lows and higher highs, this was starting to tell you right in here the trend was no longer down. Yeah, it's more or less an ABC pattern you're looking for, Don. So you have the A part, here's the B, and here's the C. This one's fairly clean and easy to see. They're not always like this. You know, sometimes when this is happening, it's really choppy and it's not clear. Sometimes it's really not clear what's going on, and that would be the passing part of trading. If you see a patterns like this and it's not clear and it's all chopping around in here and it's coming down here and jagging up and then poking down and all manner of things, it generally you would want to stand down. We have another swing here. This was a potential buying opportunity right in here. Didn't give you much, came back and checked it. Now, by the time we got over here in this thrust, and this level here was taken out, not only this level, but this level as well. I think we all would agree. There's no question now we are in an uptrend, so you're buying pullbacks to retracement. Abjit, I see your question. He's asking about ABC corrective legs and all things like that. Okay, so here's what I'm going to suggest, and I think this is a challenge for a lot of traders, and not just everybody in here, just in general. We tend to, how do you see old saying, get lost in the forest for the trees or whatever, meaning that I've seen several questions come in on this. Is it an ABC? Is it an ABC pattern? Is it a corrective? Is it market pulling back in some way? Sometimes you don't necessarily have to even count the ABCs and be very formal about it, in the fact that you are looking at the overall price patterns and direction of what the market is doing. I mean, you can put some lines in here, like where you see support and resistance. You could put the lines in there and it would help you visualize it. But what generally happens when this is flying around in real time, you're going to just have to quickly pick up on what's happening. Right? We're not going to have 10 minutes to sit and say, oh yeah, well you had an A, a B, a C, and a D there. So, and that's what you're going to see in the room too. You know, when you get higher retracements, we're going to start to say, okay, you know, the trend could be changing here. Okay, yeah, just try to step back a little bit and visualize. A lot of this has to do with sort of visualization. What is the patterns that you're seeing, and then once you sort of ingrain that into your subconscious, when you see those patterns again, it'll be good pattern recognition. It'll be really clear. Let's come over here. I want to do another one. And I'm going to ask a question like this. In fact, I'm going to clean this chart. If we're done with this chart, I'm going to clean it off. I'm going to go show something else here. All right, here we go. Same instrument, same move. And I'm going to advance the chart, and I'm going to ask a question at 10 seconds on the clock again to tell a yes or no. Has the trend changed on this chart, yes or no? Has the trend changed on this chart, yes or no? Very simple question, a Y or an N. Just one letter is all you have to type in. You don't even have to explain your answer. It's just a simple yes or no. Now, remember what we talked about a few minutes ago. I cleaned the chart off. I took all those annotations away, so you're not seeing them. But we want everyone to remember and visualize what we're saying. Now, when you see this on a chart tomorrow morning or tonight or whenever you're trading, and you see this, is the trend now down and you're shorting it? Yes or no? Okay, time's up. No, the trend has not changed. Not yet. Yeah, it might be sideways, Don. It might be consolidating. But as far as we're concerned, at this particular point in time, the trend is still up. Simply because we took the swing out. Remember what we talked about over here. Let me come back and remind you real quick. In fact, I might be able to show these two together. Stand by. So here's our downtrend on the left. Here's where we transition to an uptrend. We discussed that at length. And now we come over here and we have this little yellow patch that is formed under the midband right there. So let's contrast what was happening in this area right here with what's going on right here. This is where we ask the question. So clearly the answer is no, right? Can everybody see the difference between this little yellow patch in this box in this area right here that was a trend change? In all due respect, inside of this box with the yellow candle, I don't see A, B, C, D anything. Do you? Does anybody see any A, B, C, D anything in there like we had over here? Higher lows and lower highs, higher lows, lower lows, lower highs to constitute a downtrend? I don't see anything like that over here. Do you? All right, let me advance the chart. Ready? Here we go. Okay. How about now? Is that a trend change, yes or no? Okay, on the left-hand side, we were up. Now we're under the midband and red bars, and it's breaking support areas. Okay, time's up. Yes. Yes, this is a trend change. The support has been broken. Now, what I want to show on this, and I'm going to blow this up so it becomes a little more clear, and this is what makes, discretionary trading of these markets somewhat challenging. That's a better way to put it. If every price pattern was the same and it repeated itself over and over again all day and all night long, it'd be pretty easy to trade these markets because you'd see the same pattern over and over again. Once you see it, you know what to do, and you pull the trigger, and every trade is 100% a winner, right? Every trade is 100% a winner. But life in real-time trading is not like that. So what happens is that we have these different sizes of movement, volatility. Markets come up, they roll over and come down. They take these bigger swings. Sometimes they don't do that. You could make the case that the trend, and this was sort of a tricky part of the question of what I asked was, and this may be what some of you were looking at, was you had this swing high. You came down to here. And then you came up to here. You did not get back to the high. Right? And maybe you were counting, maybe if you were thinking ABC, you might have been starting your count here. ABC. And now that was broken here. And so in your mind's eye, you're thinking, aha, trend change. Some of you who said yes, trend change, when it was just the yellow box, maybe that's what you were thinking. And that's okay. But for me personally, I don't start counting until this swing was broken right here. In other words, as long as this market remained above the midband with blue bars and was above here, there's no question the trend was still up, right? So if it had bounced off this midband right in here and did the opposite and continued up like that, I think there'd be no question that the uptrend would have continued. And furthermore, I would submit to you that even with the yellow bars under the midband, if it had done this and broken out, we would all agree the uptrend would be continuing. So the key here is the fact that this swing level at the mid-band was broken, putting in this first swing level here. Now, I don't know if you can see it, but these little bars did pull back a little bit, just not very much, but a little bit, like this. Notice over here you had, let me contrast that area with this area here. Makes it a lot tougher to see. Here, over here you got these big swings. Big swings up, big swings down. Blue bars, hugging around the midband, swinging up and down. Makes it a lot easier to see, doesn't it? Sure. Over here, it's a lot tougher. You're getting these little sort of micro moves. And then the key thing for me was when that level was broken right there. So now what we're looking for, once we are convinced and under the belief that the trend has changed from up to down, now we look for further confirmation where we get some kind of retracements to lower levels that should roll over and continue the downward movement. Yes? So let's advance the chart and see what we get. Right here we pull back, albeit not very much. Excuse me, hold on. Sorry about that. Got a little tickle in the throat there. Excuse me. This is like that trend that we looked at earlier. Here you get sort of a little micro retracement. You don't even get near the midband, and then what happens? Boom, down she goes. Pulls back a little bit, and then boom, down she goes. Now, for those of you who were doubting the trend change belief, certainly by the time you got down to here, I think everybody would agree that now the trend is down, yes? That could have been a phantom trade at 8 o'clock. Yeah, that didn't work out. Who asked that? Craig? Yeah. Yeah, you know, that is the risk of phantom trades. Okay, we talked about that earlier. Is, you know, if you are of the belief that the trend is down or changing, if you buy support areas at the phantom, you know, the only way to deal with that when the trend is changing and you're buying, that's counter trend trading. See, the double whammy of taking phantom trades in a powerful downtrend is the fact that you're going to get double whammied. What does that mean? All right. So your approach is to buy phantom trades when the market comes down here. So if you bought this one, you got a few ticks. If you continue down here and bought it, you got creamed and stopped out. You tried to buy this, maybe you got a scalp depending on your fill, and then you stopped out. So the double whammy part of it is this, is that not only are you getting stopped out on your longs, you're missing the bigger picture, which is to be shorting it. Here again, as we looked at before in that other chart on NASDAQ, when the trend is down, you are shorting resistance. The phantom long traders are getting creamed. If you bought every time this thing came in at phantom, you would have got creamed. And the double whammy part is you missed a 90 tick move straight down, which is making you money. So in my opinion, I've said this before, and we'll pop up a couple more charts, so we're kind of running out of time. I'll see if I can get a couple more charts up in here. The best time for those phantom trades is when you're in a market where it's going up and down between the phantoms in a nice, well-defined range. You can trade that range using the phantoms. When you're in a trending market, by definition, that phantom is a counter-trend trade, and sometimes it can bite you and kill you. You really want to shift modes into shorting resistance and trading with the trend. Every time she pulled back up, you want to be shorting that puppy or adding to your position. All right, we're almost out of time. Let me see if I can get one more chart up here and see how we would deal with certain things right now. Ready? This will be the last couple of questions and the last couple of trades we'll show, and then we'll wrap, okay? Let's start with this area right here on NASDAQ. No, YM. I got one more YM chart here. Ready? I give you sort of a quasi, not too tricky, but a little bit tricky. So on the right-hand side of the chart, is this market trending or not trending? Right in here. Making it a little tricky for you. Because remember we said there's sometimes a couple of different ways to look at things. Time's almost up. Now I could have asked this question in a better way, and I'll tell you in a second how I could have asked the question that might have helped you a little bit, but I intentionally didn't do it that way. All right, time's up. Now, here's the tricky part of what otherwise seems like a fairly straightforward question. You could make the case that the prevailing trend going into this area right here was up because you are putting in a series of higher highs and higher lows, right? Even with this dip right here, it's still a higher low and a higher high over time. It's drifting up. However, in the short term, excuse me, there's no question that you're consolidating in a tight range. So if you're going to trade this market, would your primary entry be short or long? If you're going to trade this right here, are you buying support or shorting resistance? So look at it this way. You shorties, is your primary mode of entry shorting Phantom? Or is your primary mode of entry buying support, pullbacks into support? What do you think? I thought I turned that off. I'll give you a minute to think. Let me turn my phone off. Sorry about that. You know, I got the Samsung phone. I swear, every time I think that thing is off, it asks you like 15 times. Do you want to power off? Yes, please power off. Are you sure you want to power off? Yes, absolutely. Please power off. And then after you hit all the buttons, it doesn't turn off. Yeah. Okay. So anyway, back to this question chart here. Yeah, the background is green. We're stair-stepping up. The bars are blue. The prevailing trend is up, so we are buying support. Retracements into support, bounces. We're getting long. We're swimming with the stream. We're in line with the market. And you Phantom shorties, you know, you might have got a little scalper there. You might got a little scalper there. But you got creamed on that one, right? So you're trying to take a short and it blows right through you and stops you out. Whereas you long traders who were buying support are very nicely booking some profits with your trend move. All right, very good. Everybody did a great job here tonight. Thank you so much for coming. I hope this was helpful. I hope that it helps not only in your own personal trading, but to understand when you know, Gary and I are making observations in the room and calls of different areas and what that means.